Hi there, welcome to my channel. Today we're going to be talking about how to identify a trend. Some people send me messages asking as to how they could easily know when the market is ripe for a buy, when the market is ripe for a sell. And that informed my decision to do this video real quick. So this is going to be like a basic video on spotting a trend. So in simple terms, when to buy. Buy the market when it is bullish. When the market is trending up, you buy. When to sell, buy the market when it's selling. When the market is trending down, sell. That's just simple. Like I said, this is straight to profit. Keep it super simple. So the simple rule is to buy an uptrending market and to sell a downtrending market. Every other thing is just in between. Okay, so let's go into spotting a trend. So how to spot a trend. Now, when prices are peak formation, I told you guys that I'm mostly all about spotting levels of lows when market is at an extreme low and at an extreme high. That's my go-to. When I see a chart, I want to see it at those levels, regardless of the time frame. It could be on the 15 minutes time frame, it could be on the 1 hour time frame, it could be on the 4 hours time frame. But I'm very, very particular about seeing prices at major levels of support, major levels of resistance. Price could find support and resistance like virtually everywhere. You can see support here, support here, support here, support here, here, and stop. But I'm very particular about major levels of support, major level of resistance, what some people call the supply zone and the demand zone. So I'm very heavy on those zones, those levels. So say price is at the level of support and it gave us an impulse leg. Impulse leg meaning that the market gave you a push up, a sharp move, a sharp rise in price. So the point where it started the ascent, this point is seen as a low. That was like the lowest that the market got to. And then when it found that level of low, it rose all the way up and then it spotted a new level. So when it rose up, it found the high. So this is seen as a high and this is seen as a low. Now when it got to that point, it found resistance. When the market found resistance, it dropped and then it created a new low. So this low, when you look at it in terms of the distance between this and this, you can see that this low is higher than this low. So this is seen as a higher low. Okay, so when this low was not able to take out this low, we've seen cases where the market picked up, dropped, and came back all the way up. Right? So instead of picking up and dropping to create a low, it picked up and dropped to create at the same exact level of the previous low. So pretty much it didn't take out the low, it just pretty much came back to retest that zone. So we've seen cases like that. But for you to really say this is a trend, this is an uptrending market, or this is a downtrending market, basic forex, the market could trend up, or it could trend down, or it could trend sideways. So if the market is trending up, you want to see that it is creating lows that are higher than the previous low. So this low is higher than this low. The next low you want to see that that next low is higher than the previous low. So creating levels of higher lows. And this high that you're going to see, you want to see that this high is higher the next high and levels of higher highs. So this we call a trending market, and the market does that until it finds resistance and then it begins to trend downwards. So when the market begins to trend downwards, this is how we know to easily spot this. We call an uptrend. This we call an uptrend, and the next we call a downtrend. So how do you know if it's a downtrend? Price gave an impulse and the market dropped and then pulled back or retraced. So the market did a pullback or a retrace and it wasn't able to take out the previous high. This was a high, this is a high right here. The market was not able to take out this high and it just left it there. So this was a high and the market was like created a new high but unable to take out this high. But we've seen cases where price took out the high and just kept going all the way up. So until you are able to see clearly the price was not able to take out the previous high, then this becomes a lower high. Because when you compare the distance between this high and this high, you can see that this is lower. And then here the market created a low, that was starting to take out the previous low, and this is seen as a lower low. So the market creating lower lows and lower highs. That's one identification of a trend. And then the market dropped. So this is technically seen as a level of resistance. So the market dropped and then created a new high. So this is a new high and this is a new low, which is of course going to be lower than the previous low. So this is a lower low and this is a new high but lower than the previous high. So when price begins to create levels of lower highs and lower lows, we call that a downtrend. And when price begins to create levels of higher lows and higher highs, we call that an uptrend. So the rule is simple: buy an uptrend and sell a downtrend, because as we always say in the market, the trend is your friend until it bends. The trend is your friend until it bends. So you want to make sure that you trade in line with the trend. So if it's an uptrend in the market, unless you just, you're one of those scalpers that just want to catch this quick drop, you want to catch this quick drop, you want to catch this quick drop. Other than that, you really do not have any business trading against the market. So if the market is trending up, you want to look for buys. If the market is trending down, you want to look for sells. It's just simple like that. So this is the Forex market. You need to keep it stupid simple, right? There's a lot of complications. A lot of people like to complicate things, just overthink things and stuff, believing that if it's too simple, it's probably not legit. But the truth is, you can actually trade this market in a simple way. All you have to do is just, take out all of the ambiguity, take out all of the webs you've surrounded your head with. Just take out all of the complications and just try to see the market for what it is. So this is just like a preview of it. Let's go to a real chart and see what we can find there. So let's go to a real chart and see what we can find there. Okay, on a real chart, you can see this. So this is the GBP card on the 15th. So regardless of the time frame, you could actually trade. You can actually spot the trend regardless of the time frame. So this is a 15 minutes time frame. So like I said earlier, you want to spot those levels of highs and those levels of lows, right? So let's just see real quick to see if we're just making this stuff up or it's actually real. So this, for me, will be the level of high on the 15 minutes. So it doesn't matter the time frame. People come to ask me, what time frame is this? When I post a chart, they'll be like, what time frame is that? Okay. Like, well, wherever you see the structure, man, trade it. You can see it on 1 hour, you can see it on 4 hours, you can see it on 15 minutes, you can see it on 10 hours. Wherever you see the structure, as long as it's grand, it's good enough for you, take the trade. Okay. So this is on the 15 minutes time frame, and this is the GBP card. So here we have the highest level of resistance, and here we have the lowest level of support. So we could call this a supply zone, and we could call this a demand zone, right? So supply being that that's the level where you look to sell from, and demand being that that's the level where you look to buy from, isn't it? Just simple like that. So personally, I like to trade these zones. I don't trade any other zone. I just like the zone. It just puts everything in perspective, right? Just makes it easy. So price found resistance here and then it dropped. So when it dropped, it started creating levels of support and resistance. So this was what it did. Let's get the pen, and I also need to be sure I'm showing this stuff. Okay, so where the pen at? Oh, right here. So okay, so now I know I'm sharing stuff. Okay, so this is the GBP card on the 15 minutes, and this is the level I was talking about. I always want to see major levels. Let me take this out and take it all again. I always want to see major levels of resistance, major levels of support, because it just puts everything in perspective, regardless of the time frame. Every time frame has got their major levels, right? Every time frame has got a major level. So if you decide that you only want to trade the 15 minutes time frame, or you only want to trade the 1 hour time frame, or the 4 hours, or the 10 hour, whatever time frame you're comfortable with, right? You could trade it as long as you see what you're looking for. personally, I do a top-down analysis. I begin from the highest time frame and I drop down to the lowest time frame. But I always want to see something first. For me to begin to drop down to lower time frame, it's just basically me looking for an entry on those lower time frames. But I just see what I'm looking for on any time frame. So on the 15 minutes time frame right here, we're seeing that this is a major level of resistance, which we could also call the demand, the supply zone. And this is a major level of, and resistance, which you call the supply zone. That's the point where you're looking to drop all the currencies. We've been buying GBP CAD, you're looking to begin to sell it at that point, supply. And this is a level of demand where you're looking to buy from. So this is the point where you look to buy from. So this is the demand zone. So these are the zones where I trade from. I don't really trade in between. If I'm going to be doing that, it means that I'm probably taking, using the Fibonacci or trading channels. But if I'm going to be catching major moves, I always like to enter early, like to enter right, and be in line with the trend. So spotting the trend, this we could see clearly that this is a trending market. So first the market created a low, dropped all the way. Why this is yellow by default? Let's make it red. Market gave us an impulse, dropped, and then it created a new high. So you can see this was the previous high, and it failed to take out this high. So it pretty much found another level of resistance here and created a high that when you measure the distance is lower than this high. So this is a lower high, and this is a low, this is a lower low. All right, and then what did it do when it found resistance here? It dropped and it just kept trending down. So you could easily spot these as a downtrend. So basically what you're looking to do, you're looking to sell this. That's what you're looking to do. You're looking to sell. So at what point do you begin to look to enter your sell? You look to enter your sell at the levels of highs, because this is a downtrend in the market, right? So you look to enter your sales at levels of high. So you could use your Fibonacci, you could use your trend line, all of the strategies that you've learned. If you've not learned them, on the description section, you could click on the link there to join some of my Telegram channels or groups where we do share information on our trainings, and we also do have free markup sessions sometimes during the week, and we also do share trade ideas, chart analysis and stuff. So you can learn a thing or two there. So find out the link, click on it, join, and get started. So here's how you enter this. It's just simple. Just sell the pullbacks or sell the rallies, because when the market begins to trend down, it's set to rally. All right. So you sell the rallies. So it rallies, you sell. It rallies, you sell. It rallies, you sell. All right. So these are the levels where you begin to look to sell at the levels of the highs. So you sell here. If you miss this, try to catch this. If you miss this, try to catch it. But as the market continues to trend, as the trend begins to age, I like to use the word age. As the trend begins to age, that's not the time when you want to go in. As the trend begins to age, you want to not begin to enter, because in the market, what makes you profit better is where you enter from. Some people enter their trade wrong. It's a good setup. It's a good analysis. Their bias is correct, but their entry is wrong. So they'll enter too early or enter too late, and then they lose money. Meanwhile, the market is actually moving in their direction. So, but because their entry was wrong, they didn't make a profit. So you always want to make sure that you always enter right. You don't want to enter too late, and you don't want to enter too early. So one of the ways that you enter too late is when you begin to try to catch a trend that's already exhausted, a trend that's almost done. So you don't want to trade a trend that is aging. So if the trend is aging, you want to avoid it. You always want to look to enter or to trade fresh market or fresh trend. Okay, so that's how you spot a trend. See the market creating levels for a downtrending market. You want to see the market creating lower highs. I want to see creating lower lows. For an uptrending market, say this does this and begins to trend up. So for an uptrending market, you want to see the market creating higher lows, and you want to also see it creating higher highs, right? So this is an uptrending market. So lower highs, is it lower low, lower low, lower highs, lower low, lower highs, downtrend, uptrending. This is a low, and this low is higher than this low. So this is a higher low, and here's another higher low. So the market begins to create higher lows, and the market also begins to create, this is a high, this high is higher than this high, so this is a higher high. The market begins to create higher highs. So that's how you spot a trend. So the rule is simple. The trend is your friend until it bends. So how will it bend? It changes direction. Gives you a pattern that tells you that it's about to move in the opposite direction. So when it begins to trend in the opposite direction, you take your profit or you change your, so if you were buying, take your profit for the buy and enter for a sell. So you always want to trade in line with the market. So join us on Telegram, where we talk Forex and sometimes we do weekly analysis. This is 2020. The year is looking to be great and we want to profit together. Thank you for watching. I'll see you again on the next video. Bye-bye.